All right, what is up, traders? What's up, tycoons? Super excited for today's video. MNW Morpheus network has been raging, okay? It's been outperforming the market, and we're going to see if we can hit our new bullish price targets after we just recently hit the bullish price targets from the last video. If you missed that last video, I went over the different signals, how to spot those signals as they're developing, as well as give the bullish price targets that we recently hit. So we're going to go over all of that and give a summary, as well as go over the key important levels that are relevant to now for this update. So make sure to smash the like button, subscribe to the channel if you guys are new, and we're going to jump straight into it and head on over to TradingView. So initially what we had, all right, was this descending wedge pattern, this falling wedge pattern right here, right? We did get a strong breakout and it played out very, very nicely. But on top of that, not only was that one signal, okay, so let's just say that a bullish chart pattern such as this descending wedge is one bullish signal. Okay, there was actually two bullish signals. If you take a look, I have highlighted how we have a low right here and then a lower low over here. Pay attention to your RSI. Keep in mind and remember that the RSI measures the relative strength of a token at its given price. So as the token is going down, decreasing and making lower lows, we were actually building relative strength at those same exact points. This is called bullish divergence. It's a term and it's a method that traders use to help spot potential future bullish activity. And sure enough, we did get some bullish activity. We hit that trend line, pulled back a little bit, and got a massive breakout, coming up, right? So now we can use that to go ahead and come over here and break down some of the recent price action now that we understand what the divergence is, okay? So after we did that, all right, we ended up pulling back and I said, hey, we have some key and major support levels that we need to hold for us to continue to go higher and reclaim some of these bullish price targets. All right. Now, if you take a look, we came down and exactly bounced at our key support level, which was 9459. Okay. Now take a look what also happened there. We bounced off of that initial bullish divergence trend line. So that just means that, the relative strength bullish divergence was still relevant, right? And we initially bounced off of there. No, we didn't make a lower low, but what we did was we bounced off of that initial trend line that helped start the rally and help fuel the rally. So with that being said, we ended up bouncing there. All right. And when I made the last video, we ended up hitting, the first bullish price targets up here. And I said, hey, if we do pull back, we need to hold these three levels. These are going to be the three major levels of support that we need to hold to continue the trend. And the reason being that we use these three levels, all right, and that I have these three levels on here is these are the three most common and well-respected Fibonacci retracement levels. All right. And so nothing moves in a straight line down or in a straight line up. Rather, you get a move down retracement, continuation lower, or move up retracement, continuation higher. This is how you spot trend continuation, guys. So we moved up, we retraced, and look what we did. We came right over to the 38.2. We got a healthy retracement, and then we blasted off, guys, and hit our bullish price targets to the upside, actually going past them. Now, one thing that did end up happening is we ended up making a bearish divergence. So, we have a high right here, we have a higher high right here, and it was justified for us to get some type of a pullback after blowing through our bullish price targets. Reason being is because we had a high and we have a slightly lower high right here at this point as well. So, keep in mind, we should be following, right? The RSI should be following the price action, but sometimes it creates divergences. And in this case, we have a clear divergence as well, where we're making higher highs, but the relative strength index is making barely slightly lower highs. So in this case, it would be a bearish divergence. And look what happens. We get a pullback after that bearish divergence. But what do? We hold our 61.8% level of support, which is 1.8250. Now, yes, there are these little tiny wicks that are here down below it, but we did not close below, guys. When I say break through the levels, okay, it means that we have to break through them, flip it to resistance, and start closing below there, right? None of these candles close below there. Yes, they did wick down below, but those wicks can fool a lot of people, right? The candles didn't actually close below there, and each time that we tried to go and dip below, What happened was not bullers, but bulls stepped in the market and stepped in and pushed the price back up higher. So with that being said, we still haven't created new highs. So these levels are still going to be very relevant. 1.8250 is really going to be that line in the sand if we end up pulling back, right? If we end up pulling back, we need to hold that level of support, and that'll give us the possibility to continue up higher. Now, remember, I said you use these levels to spot trend continuation. If you break through these levels, okay, that's how you can spot a reversal. So if you move up, retrace, consolidate, and then break through your retracement levels, you could spot a potential reversal to the downside, as well as if you move down, retrace, and, break through those retracement levels, you can spot a reversal to the upside. And let me just show you guys real quick, right? So we'll come over here and we'll turn our fibs on. So after we had this pullback, look at what we ended up doing. We broke through the Fibonacci retracement levels of resistance. Okay, so now we have our fib resistance levels on here, and you see we come down, we retrace, we consolidate in this period right along our three major retracement levels, and then boom, we break out, get the reversal, make a high and a higher high. So that's why we use these levels. That's why these levels are so important. And these are the three most common and well-respected levels. So for now, we are battling our former bullish price target, okay, which was 2.1858. That is a very strong resistance right now. We haven't been able to stay above it very long. If you're bullish on this, you want to see us be able to flip this to support rather than resistance and start closing above it. If we do, okay, we do have our bullish price targets to the upside now, our new bullish price targets after hitting our previous ones. Those are going to be 2.573, 2.803, 3.09, and 3.466. Now, of course, we could hit any one of these and end up reversing. That's why we have multiple bullish price targets, really just to let ourselves know where some possible resistance is. Okay, that's what bullish price targets are, is they are levels of resistance. But, I just prefer the term of bullish price target. It sounds a lot more sexy, but that's basically it for today's video. Hopefully you learned something new, and if you did, smash that like button, subscribe to the channel. I do viewer request every week as well, so if you want to see your token, your cryptocurrency in the next video broken down just like this one, all you've got to do is comment down below and I'll make a video on it for you as soon as I can.